Today is the 25th of October 2021. My name is David Hickson, and in today's market update I'm going to be taking a look at Bitcoin, and in particular I'm going to be discussing a question that we are often asked to do with price interaction with the FLD, which is whether it applies to all instruments and whether it applies to all cycles. I hope that before we take a look at the markets you have had a chance to read and understand these disclaimers. So let's take a look at Bitcoin, and this is the analysis that I've been looking at in recent market updates. The important thing here, of course, is that I believe there was an 18-month cycle trough in the middle of July, which is some synchronous with an important trough in the stock markets, as you know, and potentially also an 18-month cycle trough in stock markets around the world. And of course we have the 20-week cycle peak over here. That was, I think that was the beginning of September, and over here we have an 80-day cycle trough. So this is the first 80-day cycle trough over here in the third week of September, following the 18-month cycle trough. And of course we've seen some good bullish action since then, which is not really a very big surprise because this 18-month cycle trough is a fairly big magnitude cycle. And in my previous market update video I was speaking about the fact that price was moving up into this 40-day cycle peak. So let's zoom in a little bit and discuss what has been happening just in the recent time frame. Of course, Bitcoin reached a new high. I think that was on Wednesday of last week. And you can see from this nest of highs over here, a nest of highs is where we have a collection of these circles and whiskers. Now, of course, each circle is the next expected time for a cycle peak to form. Or if we're looking at the foot of the chart, as we will in a minute, we have nests of lows which are created by these circles and whiskers, the lines to each side of the circles. And in this case, at the foot of the chart, the circles represent the next time that a particular trough is expected. So here we have a nest of highs up at the top of the chart, indicating that the time is ripe for a 40-day cycle peak to form. And you can see that it is likely that the 40-day cycle peak did in fact form on Wednesday of last week. What's expected to happen next? Well, we're looking at a situation here, of course, where we have two analyses. I probably should have mentioned that before, but I think it's fairly obvious from the chart that we're looking at. We have a trough analysis at the foot of the chart, and we have a peak analysis at the top of the chart. Now, I don't very often present dual analyses in these market update videos because there's quite a lot to discuss, so I'm not going to give too much detail here. But the important thing is that these are actually two separate analyses. The one analysis assumes that the cycles that influence this market are synchronized at their troughs, and the other analysis assumes that the cycles that influence the analysis are synchronized at their peaks. Now, if you don't understand what that means or what the implications are of a trough synchronized analysis and a peak synchronized analysis, I would encourage you to take a look at the 10 core concepts of Hurst cycles document, which I will provide a link to below this video. The important thing is that they are two separate and largely unrelated analyses. And because of that, you do often get this kind of situation where you have a 40-day cycle peak, and then really only just a couple of days later, you have a 40-day cycle trough. So the price of Bitcoin rose up into a 40-day cycle peak, and very probably this is the 40-day cycle peak over here. It has not yet been confirmed in the analysis because we need some more price action before we can absolutely confirm it. Then price moved down, and we were of course expecting a 40-day cycle trough, and it is absolutely possible that that 40-day cycle trough has already formed, perhaps over the weekend. I think that low price was over the weekend over there. So that's what's happening with Bitcoin. There isn't really any change in the analysis. We can take a look at the composite model line. The composite model line is a result of taking the information found in the analysis and composing it. So we take the cycle wavelengths and the amplitudes that have been found and measured in the analysis. And in this case, of course, we are looking at two analyses, the trough analysis and the peak analysis. And we're combining that information. And we are, when we look at price action in the past and the composite model line in the past, we are saying if the only thing that had been influencing this particular price were the cycles that have been found in this analysis, then this orange line is what we would have expected price to do. Of course, it is not an absolutely perfect representation of what price did, because there are other things that influence price aside from cycles. That is what happens when we look in the past. When we look into the future, the software which is performing the analysis and which is combining the results of the analysis into this composite model line is making an assumption, which is that the cycles will continue to beat with the same wavelength and the same amplitude, which I should point out, as I always do, is a flawed assumption because of the principle of variation, which tells us that cycle wavelengths and their amplitudes are constantly varying. And so when we look into the future, we cannot really make that assumption that the cycle wavelengths will remain constant or the amplitudes will remain constant. But it is something upon which to base our understanding of what we should expect to happen in the markets. So you can see this composite model line is indicating a small little blip from this 40-day cycle trough over here. And then it is expecting price to move down into a trough because of this 20-week cycle trough, after which the bullish move will resume. Now, it is quite possible that this move down into the 20-week cycle trough might not be quite as strong as is expected by the composite model line. The bigger picture, which it's very important to bear in mind, is the fact that the 18-month cycle trough formed in the middle of July. And following an 18-month cycle trough like that, we should be focusing on the bullish moves and not focusing too much on the bearish moves. But now, I mentioned at the beginning of this video that I was going to speak about price interacting with the FLD, and in particular, not only whether that is an effective approach to use when studying the markets for different instruments. And here, of course, we're looking at Bitcoin, and I spend a lot of time speaking about stock markets, and I have demonstrated many times over the effectiveness of the approach working with stock markets, but it is also a very effective approach working with Bitcoin. And another question that we are often asked is whether it only applies to certain cycles, or does it apply to all cycles? The simple answer is that it applies to all cycles. There are some complications. Basically, you do require a sequence of 2-to-1 harmonic ratios between the cycles that are influencing the markets. So I'm not going to get too complicated here, but suffice to say for now that the FLD trading strategy, which trades financial markets on the basis of price interacting with the FLD, can be applied to most cycles. Certainly to cycles that have a 2-to-1 harmonic ratio with the cycles longer than them. So what I want to do is, I had a question and answer call with people who have been going through our Trading with Hurst Cycles Foundation course over the weekend, and I was asked this question about different FLDs, and I took the opportunity to take a screen grab on Thursday. So this is a screen grab that I took on Thursday of Bitcoin. This is a 1-hour chart. You can see in the watermark there, H1, indicating that this is a 1-hour chart. Each one of these bars represents 1 hour's worth of price action. And the red line that is plotted here is the 2-day cycle FLD. So the FLD is, of course, the future line of demarcation. It's a very simple line that you can plot on your chart. It is median price displaced to the right, in other words, into the future, by half of the cycle wavelength. Each FLD is based upon a particular cycle. And so this is the 2-day cycle FLD. Now, when I grabbed this screenshot on Thursday afternoon, you will see that the analysis on the chart indicated that potentially a 5-day cycle trough had formed over here on the 13th of October. and that a 10-day cycle trough had formed over here on the 17th of October. Now, I trade a sequence of 8 interactions between price and the FLD, and I've demonstrated that sequence of interactions in many of these market update videos. You can pretty much choose any of the market update videos, and I speak about this sequence of interactions. We label them from A through to H, and they take place over a single cycle, which is of 2 degrees longer in the nominal model than the cycle upon which the FLD is based. Now, that's not as complicated as it might sound. This is a 2-day cycle FLD. And of course, these cycles are color-coded, so we can use this stack of diamonds over here to take a look at our cycles. The red colored cycle is the 2-day cycle. The next longer cycle is the 5-day cycle, and the cycle longer than that is the 10-day cycle. So over one span of a 10-day cycle, we would expect to find the 8 interactions between price and the 2-day cycle FLD. So an interesting thing happened on Thursday, and I used it to demonstrate a point in answer to a question that we'd been asked on the basis of the Trading with Hurst Cycles Foundation course. And that's a little beyond the scope of today's market update video. The question had to do with handling the analysis situation on an intraday basis, which is what we're looking at here. The important point, however, for the purpose of today's discussion, is this question mark that I drew here, and the fact that I believe that this 10-day cycle trough that had been found on the 17th of October should probably have been moved to this cycle trough position here on the 13th of October. So that was really what triggered the screenshot, and the taking of the screenshot was that I wanted to discuss that. I'm not going to discuss that in too much detail, but what I am going to do is discuss the way in which price interacted with the FLD, because it provided a textbook example of price interacting with the 2-day cycle FLD. Now, the 2-day cycle FLD is a really nice cycle to trade if you are interested in holding trades for many hours, perhaps a day or so. It's a good cycle to trade, but we have an absolutely textbook example of the sequence of interactions. So this is how it works, starting with a trough of 10-day magnitude. And as I've just mentioned, my opinion on at the time that I took the screenshot was that the 10-day cycle trough had in fact occurred on the 13th of October. We label the interactions starting from that trough, the interactions between price and the FLD, in this way. Here is the first interaction, which, as you can see, I have labeled as the A category interaction. And let me just erase that pen mark because it's a little unnecessary. And the important thing is that the A category interaction usually provides a target, or I should say always provides a target, and price usually reaches that target. That target would have been about up here. You expect an equal price movement beyond the FLD as had preceded the point at which price crossed the FLD. Price didn't reach that target, but it then came back down to the FLD, and we witnessed our next price interaction, which is the B category interaction, where price is expected to find support at the level of the FLD at the time that it forms a trough of the cycle upon which the FLD is based. So here you can see a textbook example of exactly that situation. Here is a cycle of the 2-day cycle forming, I should say, a trough of the 2-day cycle forming in the market at this time. Price came down and found approximate support, not exact, but it found approximate support at the level of the 2-day cycle FLD. That is a perfect example of a B category interaction. The next interaction is simply where price moves away from the 2-day cycle FLD, or whichever FLD you are studying, and it moves upwards and continues its move, which, as you can see, brought it to the point where it achieved its A category target and took it even higher. Now, our next interaction with price is labeled the D category interaction. The sequence is not very complicated, as you can see, letters A through H. And the D category interaction is where price is expected to cross down below the FLD, and we generate a target to the downside, which in this case was reached fairly accurately. I believe we could measure that in greater detail, but I think you can see visually it fairly accurately achieved that target. And it is expected to achieve that target at the time that it forms a trough of the cycle 1 degree longer than the cycle upon which the FLD is based. Now, this FLD is based, as I've said many times already, on the 2-day cycle, and so a cycle 1 degree longer is the 5-day cycle. And so here again, this is why I believe in this particular instance that should not be labeled as a trough of the 10-day cycle, but as a trough of the 5-day cycle. And our next interaction is the E category interaction. There it is over there, where price again is expected to cross above the FLD and reach and achieve its target, which I think it might have done as early as here. It might have achieved that target just a little bit later. That is our E category interaction. We often do see price playing around a little bit with us and coming back and tapping the FLD again. That is not an interaction that we label. And the reason for that is because the rules about labeling the interaction with the FLD are not simply a matter of pulling out the next letter every single time price touches an FLD, but we need to label the interactions with the FLD in accordance with what is happening to the analysis at the time. And so this interaction would have been seen as a small anomaly, and this one over here is the kind of thing that you do often see, where price will continue to provide support as where the FLD will continue to provide support as price moves up towards its peak. So here is the peak, of course, probably the peak of the 40-day cycle we know from our longer term analysis. You can see that on Thursday I was speculating that the next interaction with the 2-day FLD would be the F category interaction. That should provide us with a good short trading opportunity. The idea is that price would cross down below the 2-day FLD, reach down and arrive at its target, at which case that F category interaction had fulfilled its purpose, and it would then move down into a cycle trough to complete the sequence, which in this case would, in my opinion, be a 10-day cycle trough. Notice the whisker for the 40-day cycle, which is already looming at this point, and the 40-day cycle circle is in fact over late on the 23rd, which was on Saturday, indicating that it was possible that the 40-day cycle was approaching, and we would certainly expect price to move down into that 40-day cycle. So this was the screenshot that I grabbed on Thursday. Let's now go back to the 1-hour chart of Bitcoin and see what actually happened. And here we are. This is an updated chart of the 1-hour Bitcoin chart, and in fact this chart is receiving live price, so this price is pretty much where I started recording. And here you can see the same 2-day FLD. Here is the same sequence of interactions that I have just talked through. There's the A, B, C, and let me put those in there. There is D, there is E. And remember, on Thursday afternoon, the time at which I took that screenshot was, I think, and you can go back and compare it with the screenshot, but it was pretty much that bar over there. And I was indicating that the next interaction I was expecting was the F category interaction. And we did, in fact, get an F category interaction right over there. And I can't quite see that top price. It's at about a level of 67,000, and the price cross happened at a level of about 64,000, roughly speaking, giving us a target of 61,000. So that was our target for completing this sequence. Now you can see that in the analysis, the software has still not actually marked this as being a trough of the 10-day cycle. So the analysis is slightly out of sync with the very clear sequence that we have of price interactions with the FLD. We would then, following the F category interaction, expect a G category interaction where price comes up and reaches towards the FLD, perhaps even finds resistance at the level of the FLD. I would label that G, and this would be our H category interaction, and our final trough was potentially over here, perhaps over here, maybe over there. Here is the 40-day cycle nest of lows. You can see it is rapidly approaching, and the chances are good, as I mentioned earlier, that the 40-day cycle trough has indeed already formed, in which case we are looking at this being an A category interaction for our next 10-day cycle, and you can see that A category interaction has indeed already achieved its target. So if you're watching the 1 hour chart of Bitcoin, you would next be looking for the magical moment where price comes down to the FLD and is expected to find support. I think it's worth pointing out here that although the A category interaction looks like a fantastic one to trade, it's a very difficult interaction to trade because you are always asking yourself, has that trough really formed at the time that you are experiencing the A category interaction? And so it takes some nerves of steel to get the A category interaction trade right. And sometimes, of course, that trough fools us and it has not yet formed, in which case we are going to experience a G category interaction, sometimes even a double GH category interaction, in which case price will find resistance at the level of the FLD. And so very often I miss the A category interaction. But what I do look for is this magical moment where price comes down to the FLD. If it appears to find support at the level of the FLD, then the C category interaction is a really good trade to take. And so that is what I will be doing as I watch Bitcoin coming down towards the 2-day FLD. If it finds support there, then I will identify a good bullish trading opportunity. I do hope that you found this market update interesting and useful. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.